Enter today's date. This would normally be the 30th of June of the financial year end that you are doing, in this case the 30th of June 2013. The reason for this simply is that the notes regarding the appointment of income have to take place at the 30th of June or before for them to be valid for tax law reasons. The financial year end is simply the financial year end of the year that the trust is appointing the income for, in this case once again 2013. Note this minute can be used in future years, hence there is an option there to select 2014, etc. You now need to enter the name of the trustee. Note this is the name of the trustee, which could be a company or yourselves as individuals. And then the name of the trust. The name of the trust is the name that generally appears on the trust deed. This is the name of your family trust. So it normally reads as in this case, XYZ Proprietary Limited as trustee for the Jones Family Trust. You now need to enter the names of the beneficiaries you intend to appoint income to. You will note that when you enter a name in this section, it also appears in the capital gain and dividend area. The reason for this is there are special rules for distributing that type of income, which will be discussed shortly. Getting back to the appointment of income, enter the name of the beneficiary and then enter the percentage income of the trust's income for the year you wish that beneficiary to receive. Often this will follow a pattern in previous years, so you should have some idea of what that is. If not, call the office to discuss these issues. Remember that children can only now receive $416 of trust income without paying very high rates of tax. On that basis, if you know approximately what that percentage is, enter a very small percentage figure for your children that would reflect approximately $416 in income. Remember, once you have allocated all the respective percentages, they should total 100%. The form has a calculator to make sure you do enter the correct percentages. This area is for a trust that has received either capital gain or dividend income. Technically, you only need to use it where it's your intention to distribute the capital or the dividends in a different way than you would the other income of the trust. Trust law under tax rules now requires you to specifically identify who's going to get the capital or the dividend if they're not going to receive it in the same percentage as the other income. If it's all going to flow in the same way, you can theoretically appoint the income on a percentage basis and the other two income streams, capital and dividends, will follow. If you do specifically want to allocate it to a specific beneficiary, you need to list it here. This can get involved and you may need to call to discuss this. Another point about this, the ability to do this sort of distribution is determined by your trust deed. You can't just adopt a specific distribution of capital or dividend to a beneficiary if your trust deed does not permit it. Once again, if you're intending this type of distribution, you'll need to review your trust deed or contact the office. This document constitutes evidence of your intention as trustees to appoint the income of the trust to the beneficiaries for the year and that you've done this by the 30th of June. Print or save the document, bring it in with your tax return, or when you bring your tax return in, advise us of the details of this document verbally.